welcome to Business Morning here on Channels Television. And we can see that reactions are still trailing the result of the presidential election. We've heard from the opposition parties. Well, the interesting and the good thing is that everyone has agreed that there's a need to keep peace in the country, and so the courts is where they head to next. And talking about the courts, today is that sitting in the Supreme Court to deliver judgment in a suit brought against the federal government on the Naira redesign policy. Remember that 16 states of the Federal Republic of Nigeria had instituted a suit to challenge the legality or otherwise of the introduction of the policy. And Justice John Iyan Okoro, who had led a 7-man panel of justices of the court, had on the 22nd of February fixed today, the 3rd of March, for the court to make its decision known. The 16 states had been led by Kaduna, Kogi, and Zamfara, and are praying that the apex court will void and set aside the policy on the ground, and that it is inflicting hardship on innocent Nigerians. They accused the president, Muhammadu Buhari, of usurping the function of the Central Bank of Nigeria in the introduction and implementation of the policy, and asked that the directive be issued by Buhari be voided. On its part, the federal government challenged the jurisdiction of the apex court on the grounds that CBN was not joined as a party and that the dispute on the policy ought to be directed at the central bank, so the suit can be referred to the Federal High Court. Now let's go to the business of the day. We start with oil prices. It slipped in early trade on Friday, but we're on track to post gains on nearly 2% for the week as a rebound in China's factory activity offsets growing concerns about rising U.S. crude stocks and potential rate hikes in Europe. Brent crude futures were down 0.13% at $84.65 a barrel, while U.S. West Texas Intermediate crude futures was also down 0.14% at $78.06. Manufacturing activity in China grew at the fastest pace in more than a decade last month, according to data, and that's evidence of a rebound in the world's second largest economy after the removal of strict COVID-19 curbs. China's seaborne imports of Russian oil are set to hit a record high this month as refiners take advantage of cheap prices. However, the market was pressured by growing expectations of rate increases by the European Central Bank after faster than expected acceleration in consumer prices in France, Spain, and Germany. Eurozone inflation rose to a higher than expected annual rate of 8.5% in February, according to a first estimate from the EU Statistics Agency. Commodities Chicago is next. Now that's going to the commodities market. And what we see there is Chicago soybean futures inch lower. That's the opposite of what's happened in the oil price, in the oil market in early Asian trading on Friday, and we're poised for weekly losses despite gaining some support on uncertainty over supply from top producer Argentina amid dry weather condition. Wheat and corn posted tepid movements and were headed for weekly losses. The most active soybean contracts on the Chicago Board of Trade was down 0.1% at $15.07 for 3/4 of a bushel, and wheat was flat at $7.13 a bushel, while corn was steady at $6.34 for 1/4 of a bushel. Let's come to Nigeria now, where Nigeria's headline purchasing managers index contracted sharply in February to 44.7 from 53.5 recorded in January, ending a 31-month sequence of expansion. According to the data by Stanbic IBTC, cash shortages across the economy had a severe impact on the private sector in the middle of the first quarter. The most severe impacts of cash shortages were seen in the significant drop in outputs and new orders, as customers were often not able to secure the funds to make purchase. This led companies to reduce their purchasing activity and employment. The decline in new orders is the first since June 2020. The survey shows that companies were also impacted by shortages of fuel, which added to price pressures and led to supplier delivery delays. In turn, shortages led to a rise in fuel costs, further increasing purchase prices. Higher raw material costs and currency weakness were also factors pushing up purchase prices. The rate of inflation was the softest since June 2020, but higher nonetheless. Staff costs also rose again in February, but at a modest pace. The passing on of higher input costs to customers resulted in a further sharp rise in output prices. Businesses remain hopeful that economic conditions will improve alongside expansion and investment plans. The settlement has led to confidence in the year ahead outlook for business activity. Sentiment was at a 5-month high, but still relatively muted. Well, these are part of the issues or challenges that the president-elect Bola Ahmed Tinubu will have to face. And he started off yesterday promising that it will hit the ground running, and already he has a reconciliation council. And he has some other promises of what he will do in his very first days, and we'll expand on that after we have listened to him.
Very not to win leverage. That's the fact. That's the law went through cash crunch and went through petrol shortages and long queue on that. It's enough to get people angry and sit at home. We were looking at the turnout and all of that. But despite all the obstacles and the hopes, we sailed through the wind. The end wind that was against us, heaven opened. We arrived at this destination. I promise you, it's going to be a fair government, guided by the rule of law, justice, and fairness. It's going to be a hard work from day one, and we all together join hands to build a promise in Nigeria. The government of the people by the people and for the people.
That's it, the president-elect Bola Ahmed Tinubu set to take on the reins of running the country on the 29th of May 2023. And there he has promised that he's going to run a government of the people, by the people, and for the people. Well, let's look at the economic side of this and some of his promises even before now. We have joining us for this conversation Professor of Economics, Lagos Business School, Professor Bongo Adi, joining us virtually from Aja. Thank you so much, Prof. Good morning.
Good morning. Thanks for having me.
Good to have you, Prof. So let's start with the president-elect's promises there. I hope you did hear him when he was saying that he's promising an inclusive government. We do know that there's still some dissenting voices to his victory. So apparently that's why he has that reconciliation council to try and bring people together. From the economics perspective, how do you see this working? How do you think he could approach it, or maybe approach the business community to get an inclusive government even before he takes over in May?
All right, thank you very much. That's a very difficult question to answer. Just as you rightly pointed out, the dissenting voices are very loud right now. Some people, and of course, if you listen to both local and international observers of the just concluded presidential elections, so the consensus is that the election was quite controversial. The results are heavily contested. I think we've never had this level of contestation of presidential elections since the history since 1999, if I'm not mistaken. And then, of course, some people perceive the election as highly, riddled with, well, I say, fraudulency. And therefore, the legitimacy of his, election is still will really, I think that will becloud his administration in the first few months until the courts resolve all those pending issues. And of course, whenever you have such a government, the policies of such a government until the court legitimizes the administration will just be tentative. And then under such a kind of tentative system, you will not expect to have, a solid traction when it comes to economic policy making, because everything will be like on ad hoc planning. And that will not go well for an economy such as ours that is teetering on the edge already. Of course, all the statistics are there to tell us where we are. And prior to this moment, during the campaign stage, we also realized that, in fact, Bola Tinubu's manifesto was not quite robust when it comes to a good and profound appreciation of the issues. So they didn't really do a good diagnostics of where we are in Nigeria, because half the problem, half the solution is a proper understanding of the challenges. So I think the first thing that they need to do right now is to come to terms with the difficulties. In fact, some people will refer to what Nigeria is confronting at this moment as complex, wicked problems. So when you have such kind of wicked problems, you have 77 trillion debt on your head, and then you have very low revenue, and then your debt servicing is running far ahead of the growth of your revenue. That's a very big one. And then you have an unproductive economy that is not competitive. And on top of that, you are adding, illegitimacy in terms of the election output. So that doesn't quite induce the confidence that you will expect from the international community. When you have such heavy debt, and then, suffering from the low rankings that we are getting from the rating agencies, it means that you're not going to find it easy raising finance abroad, because that's exactly what we need at this moment. And nobody's going to take it seriously when it comes to renegotiation of the debt. And until all of these things are done, and these are, in fact, the one issues that must be tackled for us to make any sort of, appreciable progress in the shortest period of time. The debt needs to be addressed. That's the major issue. Otherwise, the economy will continue to suffer. You cannot have a high level of debt and expect that all these newfangled monetary policy that the CBN have embarked on, whether it is currency redesign or whatever, that they are targeting, the velocity of money and whatever they say, will have any effect. Because when you have such heavy debt and you have to service them, you have to look for the money. Then whether you're going to use the ways and means, so that will actually lead to more abuse of that ways and means opportunity. And as that happens, inflation will be the resultant effect. So it's not going to be easy, whether it is Bola Tinubu or anybody. So it's not going to be easy for the administration in the early days. But I just wish that the process that produced him, induce that confidence as to really give him the opportunity to form a really inclusive government. If that had happened, then I will tell you that, okay, we just have to, tighten our belts and work with him, to make sure that we achieve the good governance that Nigerians deserve in the shortest possible period. But as that hasn't happened, I do not foresee, any light at the end of the tunnel.
Well, that's very gloomy, Prof, but I guess we have to keep the lights on. We have to keep the candles on, you know. So talking about that issue of the 77 trillion naira debts, just as you noted there, um, there's also this conversation of the debt is not really a problem, but a problem is really the revenue. If we can change from being a rent-seeking economy, change from being a consuming economy to more of a production economy, then that 77 trillion naira may really not be that much of a problem. But how do we achieve this in the shortest possible time? Or do we just look forward to 2024 and say, okay, by the time he takes over administration in May, we just have 6 months. Is that for him to settle down? Should we still be expectant this year, 2023?
Well, we have to look at the statistics. Data is not friendly to us at this point in time. So, and that is all we have to look at. I'm not a fortune teller. The only thing I can do is to make some extrapolations from the data available. So if you look at the data, unfortunately, we cannot do away with that issue of debt and debt servicing. And there is no way you're going to rev up your revenue in the next 1 year. So that's non-plausible. So let us not just let us stop pursuing such fantasies. So it will not happen. Since we cannot raise our revenue in the shortest possible time, it means that we are trapped with the debts and the debt service. So if that is the case, then what would those portend for the economy? Of course, it's gloomy. I wish I could change the story. I wish the data could tell me something different, but that's the reality. You cannot play without debts. That's the major issue right now, no matter what anybody tells you. And then we don't have the capacity to even pay. The thing is that you can't even rebuild the productive base of the economy if you do not have, recourse to external, help in any way. We do not have technologies that will enable us to even do the basic things that we need, whether it is in oil and gas or in any other sector. We need to depend on capital importation. And then over the years, we've seen that in the last 8 years of President Buhari's maladministration, that capital importation has gone to all-time low. So, and then with this, the fraud of an election that has just been concluded, investors will definitely run away from Nigerians. Even Nigerians are planning to run away from the country. So the first thing that needs to happen is to induce some bit of confidence and trust in this economy. If you do not restore the credibility of Nigerians, people need to take us seriously. As it is right now in the international sphere, we are seen as a laughingstock of Africa, given the sham election
Sorry,
that
Prof,
INEC supervised. That is the real challenge.
Prof,
we have to look at that Prof. Before we talk about the economy.
All right, Prof, I would just have to say that do please, we're talking business here, so let's keep to that and then follow the rules of a conversation in a public sphere. I do know, of course, you have your rights. You do have the right to express your sentiments and all that, but I mean, we're on international television, so let's just keep it that way. All right, I guess we might have to take a short break now. And then when we come back, of course, there's no other major conversation going on now except what the task ahead of the new administration is. So we would take a short break now. When we come back, we have Mr. Ayodeji Ebo joining us for that conversation. Of course, we'll look at some other macroeconomic factors that is in front of the new administration. That's just in a moment. Back to watching Business Morning here on Channels Television. We're still on the tasks ahead of the incoming administration. Of course, we do have a president-elect, and he awaits the reign of powers by the 29th of May, and that president-elect Senator Bola Tinubu. But now let's look at some other aspects of what he may have to deal with when he takes over with the Managing Director of Optimus by Afrinvest, Mr. Ayodiji Ibo, joining us also virtually this morning. Mr. Ibo, good morning, and thank you so much for being a part of the show this morning, Mr. Ibo.
Yeah, good morning.
Yeah.
And thanks for having me.
Okay, so we did see that one of the tasks is the issue of weaker naira, which even as we speak, the Supreme Court is sitting to deal with that issue of cashless policy, you know, and we've seen some of not so pleasant movement in the value of naira. What do you think the new administration can do differently to boost the value of the naira?
Okay, thanks. And I think there are some quick wins that can be done. We all know what is going on around the major support for the external reserve, which is FX from oil sales. So oil theft has increased significantly in the last 2 or 3 years, though there's been a bit of improvement or reduction in the theft, because the theft also led to reduction in investment by IOCs. A lot of IOCs are invested, and that is impacting on the accretion of the reserves. So one of the major moves that we would expect is the new administration to set up like a committee and ensure that it is minimized. So I was going through the 80-page manifesto of the president-elect, trying to see some of the things they plan to do. And it was also stated that they will reduce it. We're not saying it's not, it may be impossible to eradicate it, but that would directly feed into the FX inflow. So once the CBN begins to receive additional FX inflow, that would increase the ability to be able to supply more, and as a result, would begin to see some stability. That's like a quick win. But the long-term plan would be to focus on export, manufacturing. But when you look at what we currently export, looking at the Q3 2022 import trade data, discover that agri and manufacturing accounts for 2.3 and 1.8% of total exports. Oil is the main one that accounts for about 92.5% of total export. So it means that within the medium to long term is to see how we want to be adding value to even some of the little things that we export. So beyond the adding value will mean that it will create more jobs and increase productivity within the economy. There needs to be a roadmap. So looking at the manifesto, based on the manifesto, there will be a need to now begin to tailor it. Now that the election is over, then there's a need to begin to tailor on how there will be implementation of this policy. And I believe that once this is done, we will be able to see, once there's increased productivity, increased employment, it will feed into insecurity. And lastly, on your question, is insecurity is key to investment. No, it's been affecting both foreign and domestic investment. So there's a need to overhaul our security system so that there will be there will be some harmonization, and it would be able to create a bit of comfort for a lot of potential investors, which would lead to improvement in employment generation and investment. And that in itself will attract both foreign direct investment and foreign portfolio investment, which are major inflows even to the external reserves, and gives more power to the CBN to supply and defend the naira.
All right, Mr. Ibo, a lot of people have said, and it seems quite kind of obvious, that the problem of Nigeria is actually not a manifesto or the content of a manifesto or even a policy. You know, it seems to end at the point of implementation. You know, so yesterday we had Dr. Buda Yusuf, and he talked about building an economic team, but even that does not give us an assurance that promises will be implemented or policies will be implemented. So when we look at it from this perspective, what can be done differently to ensure that the good plans, the good content of the manifesto, policies that we even have in existence can be implemented? You know, we've been talking about diversification of the economy for so long that it seems we're getting tired of that, you know, but implementing it actually seems to be what we should be focusing on now.
Okay, thanks, Hini. And I think you hit the nail on the head. Our problem is not actually the policy formation. It's not actually having the committee and the advisory. It's the political will to make that step. Yes, there will be challenges around when you look at the budget, how will it be funded? But once there's the political will, even that will create confidence for investors. They need to begin to see the signal. We need to begin to see that step that would be taken. And if people have been saddled with responsibility of implementing and we're not seeing that impact, there needs to also be consequences so that it will serve as lessons for other, let's say in quote, ministries that are supposed to implement policies and nothing is being done around it. So if we don't take it in that direction, it will all just be like business as usual. And we're in a situation where there needs to be a change to the direction. The economy is really not in a very interesting situation. So there needs to be a change in direction. So what we'll be looking forward to is that political will, enforcement, and assessment. So when there's a policy, if it's a monthly or quarterly assessment of those policies, what has been the impact of it? And there needs to be like an independent party. If the government needs to employ like independent, those that their independence will not be compromised, to assess the impact of some of those policies, that would help to know whether strategies needs to be changed or there needs to be acceleration. And where there are blockers, then there will be need for them to discuss and see how they can be unblocked and they can make progress. I think that's what even the focus in, because rightly, it sounds interesting. I was looking at the 80-page manifesto, and there's really nothing significantly new that would not have been in all the document, economic growth and recovery plan, a lot of those documents. But when you look back 2 years, 3 years, how much of those policies have been implemented so far? So I think you are right, and everyone concerned is germane, that what we need to focus on is that political will, that implementation, monitoring, assessment, and at the end of the day, we believe that we'll be making progress.
So I'm wondering, what change do you think the removal of subsidy will bring, you know, to all of this, the issue of debts, you know, and the change that we really need? We do know that it's only provided for up until half of the year. What difference do you see it bringing to the picture?
Okay, thanks. When you look at what has been budgeted for the fuel subsidy from January to June, it's about 3.6 trillion naira. When you look at capital expenditure, which is about 5.7 trillion naira. So it means if subsidy is not removed, we will spend more on subsidy than capital expenditure that will impact on the entire economy. But for me, in my own view, is that it should also be faced, because it also comes with its impact on the economy, direct impact. It can be faced, it can be a 1 or 2 year project that it's, but should not be like a sudden or a total removal. That's my view, so that the savings is channeled and it should be ring fenced, because that's how you can also provide confidence. So 3.6 trillion that was supposed to be spent in the second half of the year, if it's 1 trillion or 2 trillion that will be saved from it, and there will be projects. We've seen government carry out that structure in the past for Sukuk bond, that when you fly on roads, you see projects, this is Sukuk 1, Sukuk 2, you're able to, so we can say first subsidy savings, this road to the north, road to the west, to the east, And people will have confidence, and they will even be the one to clamor because they can actually trace these savings to projects that impact directly on them and would also open up business activities. So I think, by and large, the focus should be a gradual removal, but we all know that it's going to have significant impact on savings, because the more we borrow to fund fuel subsidy, the more we have to pay, their debt servicing continues to go up, and the more we have nothing left for capital expenditure.
Mr. Ibobo, isn't that what we tried to do, I think, with the administration of former President Goodluck Jonathan, when we had buses that were supposed to cushion the effect of removal of subsidy, and that didn't go down really well?
No, I think it's two different scenarios. So it was at the point when it was already being removed, when there were agitations that buses were being purchased. So what we are saying is that there should be an articulated paper or a plan that, based on this fuel subsidy removal, which is contained also in the manifesto, this is how we plan. This is going to be removed. Is it over 6 months? Is it over 1 year? And that savings is not about just purchasing buses. If we channel that savings to rail system, and there's also security for the rail system, it will reduce the cost of moving things from north to the west or from north to the east. It would have that direct impact, because it may not be easy about just acquiring buses. It's also like a social intervention funds that it's not about acquiring those buses. How do you maintain them? But do infrastructures, good roads, that it will not take from Lagos to Ibadan. It will not take more than 1.5 hours. So you have the option of using rail, and people can move goods. So those things will have more lasting impact than just using it as social intervention. So they don't come and, if they say they would share 10,000 or 15,000 monthly based on the savings, that will not create productivity. It can only maybe for a while, but that lasting impact that we're all looking for is what should be focused more on. And at the end of the day, it may be painful at the beginning, but we would all just be focused on the lights at the end of the tunnel.
All right, Mr. Adejebo, thank you so much for sharing your thoughts and those suggestions with us. We do know this is the time to have such conversations so that the incoming administration is listening, and hopefully, a thing or two would be achieved and added to their plans. Thank you so much.
Always my pleasure. Thank you.
All right, so we're heading to the markets now, and Anete Edet is here to give us a review of how the market fared yesterday. Anete, good morning.
Good morning, Ini. Yes, well, we have a rebound, and guess what? It's Airtel. First of all...
Yeah, well, Airtel took us down the day before,
exactly.
So it's their responsibility to bring us back
exactly.
up.
Well, of course, and when you also take a look at it, it was a negative market breadth. So Airtel, and not just Airtel.
So we lost that positive market breadth the day before that we had. Does it mean the market is going bearish now?
No, I guess the market is still on the uptrend, still maintaining the uptrend, but not as wide as it had.
Yet to date, we're still positive, yes.
Yeah, well, yet to date, yes, we're positive at about 8.62%, but month to date, the month just started. Today is the third trading day, to be precise, in March.
Yeah, it's too early to say.
Yes, it's still too early.
3 days.
Still too early. Profit taking is there to be made, but so far the market has made a remarkable feat. That's the numbers.
Market.
The equities market. But then I will be giving you all the market figures, starting with the fixed income market.
Right.
And now with the fixed income market, the bonds market, it's a flattish trading across all the segments of the fixed income market. We're starting first of all with the bonds market, activities at the Treasury. This is at the FMDQ securities market, where we had a flattish session for Thursday. We have sell pressures was on the January 2022 bonds paper, but when you look at this board, the 18th of April 2037 had the most attraction there. It had 11 deals and at a value of 13.6 billion naira. But cumulative, what you see there is 17. So that means the 18th of April contributed most to this number that you see here. And in terms of the total valuation, 16 billion naira. Let's move over to the Treasury bills market. It's also quiet trading there, muted. Average yield there is unchanged at 4%. Now let's look at the board. 22nd of February 2024, 47 deals, value 45.35 billion naira, and cumulative total number of deals there 51 at 45.68 billion naira to be precise. Let's move over to the open market operations. There we see total number of deals 22nd of November 2023 paper later this year, which has had 9 deals. And for that open market, we also have the average yield there was flat at 3%. So investors are actually just taking a pause, especially now that we've had the announcement of a new a government that will be taken over by May 29. So, and at the same time, we also have for the money market, we saw the overnight lending rate there, it closed flat at 10.83%, while the open repo rate closed flat at 10.50%. Let's move over to the central bank special bills. We have the 6th of March 2023 paper having the highest number of concentration there. 2 deals there, 9.62 billion naira, cumulative 11.62 billion naira, and total number of deals 4. So that's it for that market. We will be having analysts to talk more about this market. We have Bosun Obembe, fixed income dealer at Access Bank, to tell us more about the fixed income market a day after, review that market, as well as what to expect in the first full week of March. Thank you for joining us, Bosun.
Good morning. Thank you for having me.
Okay. Now, so far, before I let you have the analysis and the look into the week ahead, we've had a very flattish trading. And recently, the central bank has announced that it plans to raise about 1.13 trillion naira through the Treasury bills market. And within the month of January and February, it has raised a total of 540.9 billion naira. Now, so tell us more about this fixed income market, the Treasury bills market, what to expect, and all of the things that we should be having on our mind.
Well, thank you. So just like you mentioned, for this week has been a quiet market. What we've seen this week is a lot of liquidity into the system. Yesterday, the market liquidity was over 1 trillion. So on the 1 trillion that the DMO plans to raise in the second quarter. So during the week, we got the second quarter Treasury bill calendar. Likely the 1 trillion is just for refinancing of maturing paper. So it's not as if the DMO is planning to raise fresh fund. So we have maturity coming up in May, in April, and in March. So March we have about 550 billion. Next week we have 2% of 24 billion in Treasury bill maturing. So we expect that the DMO wants to do is to just roll it over. However, it will likely be at a lower rate compared to the rate at which is maturing, given the high system liquidity. So what we've seen in this market is liquidity that drives the rate. So at the last auction, the rate moved unexpectedly from 2.24 to 9.9. And that same instrument is currently trading in the market at 4%. So the market is expecting that at the next auction, if we still have this liquidity in the system, the rate will likely come lower than the last stop rate of 9.9 on the 1-year paper.
Okay, so now earlier in the week we had I know you wouldn't want to talk more about the politics, but you can't take this away. Earlier in the week we saw Euro bonds rally on the announcements of the new the winner of the presidential election. Now, what is your expectation for the Nigerian bonds market in days to come? Just in 30 seconds.
Okay, so like you mentioned, so what we've seen there has been a positive one for the market. So it means that there is stability, the political risk or the country risk is eliminated a bit. So we've seen some counterparties showing interest in terms of maybe providing funding for bank, in terms of maybe cherry picking on some of the instruments that we have in our market. But in terms of maybe the first flow from the foreign portfolio investor, maybe, I think maybe they will wait to see how the new government will start working before they start bringing the fresh food. But it's been a good one. It's a positive one, positive outlook for the market, and we've been seeing interest from offshore, trying to find out the policy of the new government.
Okay. Okay, so thank you so much for that analysis, Bosun. And of course, as usual, our eyes are on the market. That's Bosun Bembe, fixed income dealer at Access Bank. Let's move over to that market, the very popular market all around the world. Our stock market is up again, more than 0.25%, 0.29%. As we had mentioned before, it was Airtel Africa, which had already previously dented the market's performance by more than 0.5%. But at this same time, in addition to some other 16 other equities, managed to lift the markets up by 0.29%. In value is about 88 billion naira for the gain recorded, 30.326 trillion naira total market capitalization. Now let's move over to the sectoral performance. It's profit taking across board, as I mentioned earlier. The lone gainer here was the consumer goods counter. Its components were able to make the green color on that market. Let's move over to the activity chart. For the activity chart, there you can see there, volume down by more than 63%. Value also down more than 50%, while deals, as you can see there, at 4,385 number of deals carried out there for that market. Well, so for the equities market, I would have told you more about the fixed income, about the unlisted securities market, but time is never your friend.
Yeah, but I mean, it's interesting to note, as your guest, Bosun Bembe, noted that the market seems to be responding positively to the certainty that we now have in the economy. You know, and even before now, analysts do believe that the three major contenders, you know, are pro-market individuals from, you know, their history. So that might also be giving some investors the confidence to embrace the markets and head back there.
I think also the business environment, not just for the markets, the general business environment, the macroeconomic environment is what you should also take into cognizance. But I think all of that is also, they're also welcoming the government, and of course they're looking forward to a successful transition from the current government to the incoming government, and of course so many positive expectations for.
Yeah, well, I guess the most important thing here is peace and certainty.
And stability.
And stability, obviously. That's what everyone is looking forward to make a decision. But anyway, thank you so much, Anite. As you give way to Ladi Williams, who comes in with the crypto market. Crypto market does not react to Nigerian election. So I think Nigerians, let's look at
or maybe the Nigerians, you know, might react to how they view cryptocurrency, you know, with the president-elect.
Do remember, Ladi, it doesn't matter who the new president is, the 2022 finance bill places some sort of tax on cryptocurrency.
Yeah.
So, I mean, it's there, it's there. It's law, so you guys get ready to pay. So since you guys are not taking us and our politics as a major factor,
get ready to pay for those trades.
The Fed had a meeting today, and then the minutes were released next week. The market will react to that minute. Yeah. But when it comes to Nigeria, you just ignore us. We won't take that.
Well, Nigeria is not, you know, fully ignored, even though, you know, Nigerians actually account for a majority of you know, investors in the crypto space. So in Africa too. So.
And yet, you know, the macroeconomic factors in Nigeria does not have an influence or impact on the movements of the market.
Because I remember sometime in, I think 2017, 2018, you know, there was this talk about China. You know, when the market moves, you know, you hear traders say, oh, China has woken up. They're buying all the coins. So at some point, we might start to hear, oh, Nigerians are awake.
Because we're majority traders and investors in the crypto space.
So we'll keep watching out for that.
Ladi, it's your responsibility, Ladi.
It'd be interesting to know, you know, the president-elect's stance on cryptocurrency. I'm going to find out what that is.
I don't know.
We're all going to find out.
I'm not on that.
We're all going to find out. But let's look at the market now. We see it's neutral, 50 points, showing fear in this market because we moved from greed. We did get to greed, but now back to neutral. It's been, you know, oscillating between neutral and greed, but now it looks like fear might be on the horizon with what we're seeing now, 50 points on the verge now of going lower. Look at the market cap. We see almost looking like it wants to lose that $1 trillion mark at this point. There's 3 points there, down 4.15%. Volume traded, that's up 21.16%. That's on sell-offs we see in the markets. And we see Bitcoin dominance sitting pretty there, 42.08%. Let's look at the price of Bitcoin this morning, $22,368, lost that 23K mark all the way, almost trying to lose that 22K. It's looking like a bloody Friday today, down 4.4% for Bitcoin, and volume traded $26.05 billion. Let's bring in Olumide Additional now, financial market analyst. Hello, Olumide, good morning.
Yeah, good morning, Ladi. Thanks for having me.
Yes,
it's a Red Friday.
Yes, Olumide, deep red Friday is what we're seeing right now, and it looks like it's all about Silvergate. Silvergate, it seems FTX is finding a way to still weigh on this market even in 2023. What's happening? Is this the contagion we've been talking about from 2022 coming into 2023?
Yeah, in much parameters, it seems like it's a continuation of what we saw from FTX, because according to the Securities Exchange Commission in the United States, they highlighted the fact that United States banks need to be very cautious towards their crypto exposure, and that was equivalent to findings around Silvergate, seeing that they had systemic concerns around their financial conditions, and that really spurred the market on downward positions. We saw Bitcoin losing $1,000 within an hour. We saw liquidation as much as $245 million in the past 24 hours. And also the fact that many of these entities use the troubled California lender for crypto transactions, so liquidity drying out. So it's been a very parabolic session, and that was why at some point Bitcoin broke below the $22,000 mark before regaining support. But you know, saying all these things, one needs to also understand that it does tell you the fragility the bulls are having right now. The troubled crypto bank had its shares down by more than 50% on Thursday. It has lost 95% in 2021, and that just tells you the predicament around crypto entities. But you know, with the skepticism playing across the crypto market right now, positivity still remains. You know, the fact that Coinbase also launched their layer 2 network where accelerate decentralized finance tokens and things like that. That really brought in some positivity. You know, coming back home, we saw that with the election going in favor of the ruling party, the P2P rate is still remaining across between 747 naira to 750 to $2. Just telling you that a lot of Nigerians are still uncertainty with the direction of the market.
Right. Talking about, you know, the president-elect, what do you think his stance will be on cryptocurrency in Nigeria?
Based on his manifesto, he had highlighted the fact that he was going to create some pro-friendly policies towards the crypto market. But the issue we have is that the party had shown an anti-stance against the crypto market, and that has deepened mistrust across many Nigerians. You could see that after the election results, the excitement among Nigerian youths had been lukewarm, despite the fact that crypto plays a major role in their ecosystem. So it's really left to be seen. But you know, we can only look at their manifesto and the actions of Mr. Tinubu. But looking forward to, I think we're going to expect some positivity around the crypto market with the CBN's roadmap, including stable coins, and how probably integrating crypto assets might mean that things might change. But for now, it still remains the status quo, and no excitement, Ladi.
Yeah, still early days. And looking at Bitcoin price action now, we still see the dollar also strengthening at this point with that solid jobs report in the U.S. So I believe that must be weighing on the market too. But what are you seeing for next week in the market? Any headwinds or tailwinds?
Yeah, definitely the US dollar and the reaction across risky assets will definitely be on the headlines. But also the way the investors take the actions around Silvergate. You know, one of the concerns about the market is liquidity. So if we're seeing an hawkish Fed narrating tightening or removal of quantitative easing policies, we're going to expect more drawdowns. But you know, Bitcoin is still up more than 35% this year, so it will be pretty premature to bet against the bulls, despite the setbacks we are seeing right now.
All right, thank you so much, Olumide Addition. I'll be looking forward to all of that next week. Thank you.
Thank you for having me. Yeah.
All right, let's flip on now. Let's see what's happening with Ethereum. $1,500, lost the $1,600 level. It's down 4.56%. Let's look at the top points of market cap. Expecting all red across board. Cardano, the biggest down there, down 5.17% at 33 cents. And we see XRP going deeper into that lower 30-cent level, down 4 points. And we see 7-day gainers make it down, stopping the counter there, up 20.01%. So just as we've been used to since we started covering this market,
Fridays,
we know about Fridays. They tend to be quite bloody, and we're seeing one actually today.
Yeah, well, 2023 hasn't changed the map, I see.
No, it hasn't changed much.
All right, Laddie, thank you so much. We'll
All
see you
right.
at 1:30, Business
see you.
Incorporated. Well, that's it on the program today. Thank you so much for being a part of it. It was just 2 days, but I'm sure we made the most of it, and we hope to do better next week. Do remember, you have to go out to vote next week, Saturday, to choose the governor of your state, because if you don't vote, then you don't have a right to complain. So as we get set for that, have a great weekend. Try to rest, and we'll talk again on Monday. Oh, remember, 7 p.m. tomorrow, Capital Market will be here. Will Ibon will give you a lowdown of a summary of what happened in the different markets. That'll be 7 p.m. tomorrow here on Channels Television. I'm John McCall. Have a great weekend.